Good day and welcome to the Benefits Trust webinar on the Introduction to the Benefits Trust and Introduction to ASO Plans. The Benefits Trust was established on January 1st, 1994, and we are a full-service third-party administration company. We work with brokers like yourself, and all we do is provide services with budgeted ASO benefit plans. I like to have a picture behind a voice, if you would. My name's Robert Crowder. I'm the president of the Benefits Trust. I'm the gentleman on the left-hand side. Karen Taylor-Smith is in the middle, and Mike Ignatz is on the right-hand side. Karen's going to be helping me present today.
And we're hoping that with this session, we can provide you with a good concrete overview of our services. So let's get started.
Thank you, Karen. What we really want to talk about is the truth about ASO plans and give you more information about our services. And the market context that we want to talk about is really that 1 to 101 employees. We want to talk about this market context with entrepreneurial businesses that are profitable. As I like to say, there are two types of prospects: those that are profitable and other people's prospects. So all of our comments today are going to be based on the smaller end of the marketplace, and again, successful entrepreneurial businesses. Before we begin, what is an employee benefit program? I've been selling employee benefits for the last 27 years, and I had this big aha a number of years ago, not that actually many number of years ago, but about 5 or 6 years ago, and really what is an employee benefit program? And an employee benefit plan is a promise between an employer and an employee as a condition of employment. And when you say this word promise to an employer, especially an entrepreneurial employer, a light bulb goes off in their head quite a bit, and it says, hey, great, I can promise anything I want because the entrepreneur, the employer is in charge. So a benefit plan is nothing more than a promise between an employer and an employee. That promise often consists of three components: insurance, reimbursement, and administration. The insurance is a part of that promise, and the insurance is there to protect the integrity of the promise so it continues into perpetuity. Reimbursement is just reimbursement of routine expenses encapsulated in that promise. And administration is keeping the promise on side from privacy legislation standpoint, from a taxation standpoint, and keeping the promise whole from an employer standpoint as well. So that promise often consists of those three different components. We look at the workplace that's out there today, and it's interesting when an employer makes a promise to an employee. Employees are looking for different things today. The society has changed considerably over the last 20 years. Employees are now looking for that work-life balance. They're not looking to work, potentially a ton of overtime or weekends or evenings. Another thing is people are working remotely. Here's the CEO of a particular company, for example, and she's working remotely on her laptop. Well, employees are in the field doing what it is that they do. So the work-life balance is important. Society is changing. Employers look different than they did many years ago. The fact of the matter is, good clients want and need your services. They need your help with their employee benefit plan, and the marketplace, especially in Southern and Central Ontario, is absolutely enormous. There's 50,000 businesses between 1 and 101 employees, not long distance in the 416-905 area code. The best part about it is, as I mentioned, that good clients want and need you. So what are clients looking for? When we're looking at a successful entrepreneurial business, what are they really looking for when we're talking about benefits? Well, I think they're looking to gain control. Benefits historically haven't shown up on a lot of people's radar. Now, as they're getting more and more expensive, they're looking to gain control of those costs. They're looking to understand what those costs are. But the entrepreneurs, successful entrepreneurs, hate to be out of control. They want to be in control, and they're really looking to gain control. They don't want any more financial surprises. Entrepreneurs hate surprises. Successful entrepreneurs really hate surprises. So really, I think your clients are looking to gain control and eliminate surprises. Oh yeah, don't forget about price. Clients are also looking at price. That is something that is important. It's not as important as value, but really they're looking at price as well. So when we're talking about a successful business owner and they want to eliminate surprises, where are these cost surprises coming from? Well, it's amazing. If I heard this quote a number of years ago or a couple of years ago, but of all the scientists that have lived and worked in the last 2,000 years, 85% of them are alive and working today. And when we're looking at benefits and we're looking at drugs specifically, there's a gallery of new prescription drugs that are on the marketplace. 10 years ago, if we were doing this presentation, we wouldn't be talking about 50, 70, 80, $100,000 a year drugs. I think there's a new drug on the marketplace that I was reading about just yesterday in the Globe and Mail, and it's a $500,000 a year drug. It's just absolutely amazing. That didn't exist a number of years ago. So these types of drugs, along with many other things, are creating this cost pressure and these increase in costs. So the trends for 2016 in employee benefits have been the same that they have been in the last 20 years. They're increasing at a rate greater than inflation. And it's amazing. In my short career, again, just 25 years of doing this, or 27 years of doing this, I remember one of the very first group cases I sold that had a single digit or a single number family rate. The family rate for health was under $10. And I think, Karen, about 2 or 3 years ago, we had our first family rate for health that was over $1,000 a month.
Absolutely. And these are changes that are, continuing to manifest and continuing to show up in benefits plans. And obviously, they're a concern and a challenge for these small employers. So let's look at plan funding and look where these challenges are taking us. And when we compare between traditional funding and ASO or administrative services only funding, where these cost pressures are taking people. If we look at traditional funding and ASO funding, starting from the client promise, an identical client promise, there's a lot of similarities between these two funding models. Both of them are starting with risk charges for insurance, whether that's life insurance, critical illness, long-term disability, stop loss, or large amount pooling. We've got those risk charges for the insurance component. On the traditional funding side for reimbursement, the funding is based on anticipated claims. And so that's anticipated claims, including reserves and trend factors and inflation factors, where because the insurer is looking on an anticipated basis, they're doing that very conservatively in order to control costs and funding. You add to that the administration, the plan operation expenses, and on the traditional funding side, those risk charges, anticipated claims, and plan operation expenses are going to add up to the client premiums. If you compare that on the ASO side, again, identical risk charges. On the ASO side, we're comparing actual claims. And this is where the gap comes in between traditional and ASO funding, is we're looking at actual paid claims. So the client is really paying for what they eat at the end of the day. You're adding in those plan operation expenses for the administration of the plan. And on the ASO side, that's adding up to the total client costs. So certainly while there are a lot of similarities between these two funding models, the gap really comes down to basing the ASO funding on actual paid claims within the plan. And when we look at that in a different sort of model, we're looking at separating areas of risk. And so you'll see this client risk line here where we're separating expenses which are high cost but low frequency events. Those require insurance. Those are things like life insurance, long-term disability, out-of-country medical, and catastrophic healthcare claims. Those are the areas where traditionally there's been relatively low inflation. Life insurance rates, generally speaking, with stable demographics, are not going up 17 and 18% a year. Then we're separating that level of risk where you need pure insurance from the administrative type expenses or bill payments. And this is an area where you have low cost but high frequency events. So your regular trips to the dentist, maintenance prescriptions, short-term disability. These are areas of regular day-to-day bill payments. They need to be administered. They need to be budgeted for appropriately, but they're not areas of coverage that require insurance. They require reimbursement. And this is the area of the plan where higher inflation has an impact on plan costs. If we look under this risk line, this is the part of the benefits plan that really needs to be designed according to clients' needs. It needs to be designed according to the promise that they are intending to provide instead of just a standard insurance package. This area of bill payments is really where customization comes into play in terms of designing that promise. So When you look at designing a promise as a professional advisor, you're getting in there to meet a new prospect. What's the best prospect question that you can use to draw out this idea of promise and designing a custom plan? And a question that we found really successful that we shared with advisors is asking, what are the groups within your group? Start at the top first. You want to find out, who's the CEO or the executive team or the partners. But within any group, large or small, you are going to encounter groups within the group. And it's important then to discuss what is the benefit promise you want to give to each of those groups within your plan design. Coming back to those executives, starting at the top, high wage executives should receive 100% benefits. No co-insurances, no maximums. This is the most tax-effective way to provide those expenses. And if you think about an executive in the 50% tax bracket, if they've got a $6,000 bill for the orthodontist, they need to draw $12,000 in income from the company, pay half of that in taxes, and have that $6,000 left over effectively to pay the orthodontist. So you want to make sure that all of those expenses, rather than being paid with out-of-pocket after-tax dollars, you want to flow those through the benefits plan. So a key aside there as far as promise. Coming back again, though, we're reminding everybody that you're separating insurance for risk. That risk line is separating out the administration services for bill payments. And this is what we do on a customized plan basis, is to design this promise with the insurance components, reimbursement, and administration to tie it all together.
This is how we do it. It's quite simple. As Karen has mentioned, we just separate the different components. Client makes a monthly contribution to the benefits trust based on a billing statement that we provide to them, which is based on their insurance premiums. It's based on the claims transactions that we believe are going to take place in the next month, and also the plan operation expenses. So a big check comes in A. We send out a check to the insurance company on a monthly basis, or insurance companies more specifically, on a monthly basis for that risk protection. We adjudicate and pay claim transactions both electronically and via paper, and that goes out on a monthly basis. And then we also pay the plan operation expenses, which include the administration expenses, the producer compensation, and taxes. Then we send both the producer and we send the client a monthly financial statement. Without going into the details of this, this is just what it looks like. There are 3 columns: month actual, year-to-date cumulative, and after 3 months previous year-to-date cumulative. So when we look at those three different columns, the client and you, the producer, can see exactly where you stand, or where the client stands more specifically, at any point in time, so there aren't any financial surprises. If there's a surplus at the end of the month, we go, that's terrific. If there's a deficit at the end of the month, we go, that's terrific, and it continues on into the next month, where once a year we set the prices accordingly. The Benefits Trust works exclusively with professional insurance brokers. You are our distribution partners. We work exclusively with you. I can't get that word out, Karen. We work exclusively with you, and we don't sell direct. So that's important to note as well. Really what we do is with you, we help successful business owners build a better benefit plan than they can get anywhere else. It's a very powerful statement. As I like to say, we help successful business owners, because there are 2 types of clients, again, successful and other people's prospects. Build means customized approach, better and exclusive than they can get anywhere else. So we work with brokers like yourself to help successful business owners build a better benefit plan than they can get anywhere else. So what I think is important to look for in an ASO plan, or a budgeted ASO plan, is different elements of insurance, especially stop-loss insurance or large amount pooling. Thank you, Karen. Large amount pooling. We have stop-loss arrangements for smaller groups of $5,000, $7,500, $10,000 and above. Also a budgeted funding approach, as opposed to a pure ASO type of an arrangement where you're just collecting money based on their actual claims. I think clients are looking, especially smaller clients, are looking for a budgeted funding approach, so they're paying more or less the same amount each month. Also, I think it's important for a client to be looking for a conservative budgeting approach, as opposed to an aggressive budgeting approach, where we're saying, hey, we're going to save you 15% a year, or 20% a year, or 30% a year. No, we're saying, hey, this is what we believe your claims are going to be, and let's set a conservative budgeting approach so there aren't any of those surprises that exist. How does stop loss fit in? Stop loss, or large amount pooling, insurance protects the integrity of the promise, so it will continue into perpetuity. That large amount pooling, for example, using that $5,000 attachment level or a different attachment level, it's fully pooled coverage for catastrophic in Canada health claims, and it covers reoccurring claims. So, for example, if an employer has a $5,000 attachment level and they are making someone a promise that says that they are going to cover 100% of their drugs, and then God forbid that particular individual or an employee or a family member of that company needs a reoccurring drug like a beta-seron for MS, that might be $40,000 or $50,000 a year. The company would be responsible for the first $5,000 level, or first $5,000 up to that attachment level. Over and above that, it would be covered by insurance. So stop loss fits in to protect the integrity of the promise so it continues into perpetuity. What else to look for in an ASO provider? Monthly billing and monthly reporting. Monthly reporting is critical. Monthly billing is also critical as well because employers have to pay on that monthly basis. Professional administrators and adjudicators are really important as well. We have a number of employees that have been with us for more than 20 years, and our administrators are professional. The adjudicators are professional as well. They keep the promise that employers make to employees. Personalized service and flexibility, really important as well, because every client looks at benefits a little bit differently, and we've got to be flexible enough to meet their personalized needs. Drug cards and electronic dental claim submission are important. We also have an online app, or an app on your smartphone. You can also do online claim submissions as well. What else to look for in an ASO provider? Trust arrangements, annual financial audits. The benefits trust is audited on an annual basis by a third-party independent auditor. We also have medical and dental professionals on side. So if we have a medical claim that's of question or a dental claim that's of question, we go to a doctor or we go to a dentist. So what happens is you get a dentist speaking to a dentist about a particular claim as opposed to a claims adjudicator speaking to a dentist. So it just creates a little bit more of a professional environment, and more importantly, it protects the employer's promise in just a little bit more of a step. Also, active and strong insurance partnerships. At the Benefits Trust, we deal with over 20 different insurance companies and service providers. We don't have any one particular favorite company. We have a number of companies that we deal with, over 20, and we've got long-term and active and strong relationships with those partners and suppliers. So when we're looking at administration, and we're looking at administration of a benefit plan, and especially an ASO plan, you need professional administrators who work together with you, clients, staff, and employees to reduce their time spent on administering the benefits plan. Claims turnaround is critical, and rapid claims turnaround and rapid accurate claims turnaround is critical. And again, we've got an interface with a number of different ways depending on how the clients want to interact with us, whether it be with a drug card, whether it be at the point of purchase with a dentist, whether it be online claim submission. We have an app for your smartphone. As well as that, we still have people sending it in by snail mail. Whatever makes sense, but the claims that come into our office today are paid today and out tonight. We've never had an issue with claims turnaround, and that's something that we will be doing on a regular basis. Communicate with no surprises is another critical point in a budgeted ASO plan that's the most valuable. And that communication, that monthly financial statement, is really the crux of that communication. So there are no financial surprises, or any surprises for that matter. If something changes with a benefit program, you're going to catch it on a monthly basis as opposed to the year end when it's too late. This communication is critical, and clients become very aware of their financial situation just by looking at that financial statement on a monthly basis. So again, the process is very simple. Money comes in, money goes out for insurance premiums, money goes out for claims transaction, money goes out for plan operation expenses, and then we look at the monthly account balance, or as I like to say, it's almost like a sales receipt. This is how much you paid. This is, where the components of the sales receipt, and this is what the balance is, both on a monthly basis and a year-to-date basis. Again, we allow clients to have surpluses and we allow clients to have deficits, and once a year we set the budget, again, based on what we predict is going to happen in the future. This is much like equal billing on your gas bill at your home. Compensation is something we haven't talked about to this point, but our compensation, generally speaking, is built into our administration expense, and it's our standard compensation is based on the Crown commission scale. More or less, it's up for you to decide. Really, you are telling us how much compensation you want on a particular case. So for example, if we have a 10% load built on the, or a 10% requirement for administration and you want a 5% commission, our administration fee is going to be 15%. Why do we like the size of clients? I've had a number of people say, hey, why can't we deal in larger cases? Well, we can, and we certainly do from time to time, but we really focus on working with brokers that work in this size market because it's that entrepreneurial business. It's in the 416-905 area code. It's local. It's easy to get to. It's easy to talk to. The thing that I like about it most is really you get to yes or no quickly. You're dealing with the decision maker most of the time. You're able to get in front of them. You're able to speak with him or her, and you're able to get to yes or no very quickly. So your sales cycle is very, very short. As well as that, there's an endless market. There's no competition because the marketplace is so big. You just keep on moving and asking enough people to buy, and you're going to get your share. And it also allows you to maximize your profit. So again, in that 416-905 area code, really there's an endless market with 50,000 businesses. All we do here at the Benefits Trust is we work with brokers like you, and we help successful business owners build a better benefit plan than they can get anywhere else. It's as simple as that. We do it on a budgeted ASO basis. And what's next? Well, how do we help you build that better benefit plan? The key thing is to try it. Give us a try. We'd be happy to work with you. All you have to do is send us in a standard set of specifications with a summary of plan design, premium, and claims history, which is most important. Employee data is also important. And then with this information, we're going to give you an apples-to-apples quote based on a budgeted ASO scenario compared to an insured scenario. And this is going to create the foundation for a customized plan and that discussion. But it's really creating that apples-to-apples approach so the client can understand what a budgeted ASO solution is. And then, again, that starts that conversation to do a customized plan design. You don't need to be pre-approved or registered with us in advance. You don't need to take a whole one-day course or a 3-day course. You just send us a case. We'll be able to work with you on it, or we'll tell you why it's not a great case. We can answer any questions. So just ask us. We're happy to answer all of them. And we'd love to go with you to meet one of your clients or prospects and help you explain the budgeted ASO process. There's Mike Ignatz available, Karen, of course, and myself. And we'd be happy to go out to a meeting with you to help explain this concept. Our website has a ton of tools for advisors like you, so check it out. It's www.thebenefitstrust.com. We're happy to provide you with some printed copies of our tools as well and use this as a door opener or leave behind pieces.
And one of the pieces that we hope all advisors will check out is we recently launched our newest tool, which is 101 sales questions. And this is a tool that we put together along with contributions from advisors across the country who submitted their excellent questions, which can be used both with prospects and with clients. It's designed to be a tool at all stages of the interaction with prospects and clients, whether you're growing your business, whether you're looking to take that in a new direction, whether you're looking at sort of new consulting with your clients or customizing their benefits plan design. We've tried to build this tool for everyone. So please check that out. The 101 sales questions is also available on our website.
We also have an ebook on our website on healthcare spending accounts, which is just a component of a promise that an employer makes to an employee, but it's a valuable resource, and we've got superb feedback from many different advisors that we work with. So check out our website, lots of tools, and we're happy to provide you with printed copies as well. So the best thing to do is really to check us out and feel free to reach out to us and give us a call. This is a very quick summary on what we do, but really check out thebenefitstrust.com or feel free to reach out to us and we'd be happy to answer any questions. And we look forward to working with you in the future. We wish you great selling. And again, on behalf of all of us here at the Benefits Trust, we want to thank you for the few minutes that you've spent with us to learn a little bit more about us. Bye for now.